Get a lot of agents sort of wasting my time calling saying, well, hey, I've got this investor ready to look at something. And I said, okay, great. Well, how are they underwriting deals? And they're underwriting deals, frankly, worse than what marketed deals are trading for. But when you talk about what makes attractive working with an agent, I would tell you it's when an agent does more than what.
Before we begin the podcast, I have a super simple ask for you. If you could subscribe to the channel, that would help us reach more business owners every single day. Thank you. Let's begin. Cooper, you and your team at Wildhorn have returned over $91 million to investors. Now, that being said, my audience is primarily real estate agents, not just investors. So, being that you're the golden goose for these agents and brokers, what do you look for before deciding to work with an agent?
Well, Andrew, one, thanks for having me, and two, I would say we're first things first. We've been successful and fortunate, and not necessarily in that order. I think a lot of times investors' track records aren't always a fair representation of what they're like as an investor, and so we can talk more about that. But I would say we're equally fortunate that my partner, Andrew Campbell, and I are both born and raised Austinites. And sometimes we can pretend investing in Central Texas, like, man, we made this decision 15 years ago and it's played out so well. And so much of it, honestly, is that we're being born and raised here. We're kind of the kid that was born on third base and sometimes gets to pretend he hit a triple. But when you talk about what makes attractive working with an agent, I would tell you it's when an agent does more than just passing on opportunities. And I'll explain that. When I see agents or brokers, when they just forward on an opportunity that got forwarded onto them, that's not very interesting to me, and will be increasingly less interesting to an investor going forward, especially in an age where technology makes it so much easier to present, to share, to evaluate what's out there. I mean, in this day and age, there are so many softwares that allow you to understand what the actual owner of a property is, how to contact them, what their debt looks like. And so when an agent just forwards me on something because I buy apartments or I buy land, and my first question back to them is, hey, what about this is interesting to you? And their answer is, oh, I just saw it, thought of you. It does nothing for me. And I'm going to give you a change it, Andrew. People talk a lot about their love languages, and my love language is gifts. And I love to give gifts, and I feel love when I receive gifts. And in much the same way, I could not feel less cared for when somebody gives me a gift that has nothing to do with knowing and understanding me, right? And it doesn't need to be dollars spent, but when somebody knows and understands me and then they give me a gift that says, man, I saw this and it's very clear and obvious why they thought of me, man, that makes me feel so incredibly cared for. And in much the same way with brokers, what I'm looking for is that next layer of analysis. Did you do some work here? What did you see about this that you thought it was interesting? Or are you just hoping I'm the random guy that's going to pay the most? Or you're just trying to pee on me because you showed it to me. So in theory, that means you now are protected if I do this deal. That's uninteresting to me. And frankly, a really easy way for me not to work with someone.
Yeah, there's a very fine line in real estate of where am I helping you versus where am I just using you for a paycheck.
Absolutely. And that's well said.
And so one thing that I try to instill in everyone that I work with is just buy them a cup of coffee, get to know them, because 9 times out of 10, even if someone doesn't buy right away, learning about them so that when the right opportunity comes and yields, it's going to be 1,000 times better. Like, I'm sure you'd prefer it if an agent came down, said, hey, let's buy a coffee. Let me learn about your business, what you're looking for, before we try to sell you this property, any of that. So it's very important to know the person as an individual compared to just sell them this property. What are your opinions?
Or try and hope I'll give you some off market The other thing I think agents mess up a lot is, well, hey, is there anything you would sell right now? And the answer is, in this time of the market, I'd sell my whole portfolio, but at what price, right? And if you're asking me, would I sell something at a below market, or frankly, right now in this environment, if you don't have to sell something, you probably shouldn't. And I get a lot of agents sort of wasting my time calling saying, well, hey, I've got this investor ready to look at something. And I said, okay, great. Well, how are they underwriting deals? And they're underwriting deals, frankly, worse than what marketed deals are trading for. At that stage, what you're asking someone to do there is, one, it's usually, if you're going to work with an agent that didn't sell you the deal, right? That wasn't a part of the initial transaction, man, there better be a pretty good reason. And so when somebody sort of, I had an agent call me the other day and say, hey, I've got this investor. Could we show him two of your deals in San Antonio? And I said, absolutely. But to be clear, I'm not a seller unless they have a compelling price that's better than what I would get based on what I'm seeing in the marketplace, right? And that agent, and I said, I'll give you some data, but I was 6 emails in trying to explain nuances of the rent roll to an agent, that their initial sort of offer from the client. And I said, as a reminder, I'm not a seller. So unless you have to compel me that your buyer is somehow going to pay me better than what I would get on the market. And if they are, I'm willing to have a conversation. But I think sometimes agents better said, sometimes the calls you don't make are more important than the ones you do, right? Be really weary before you start, to your point, using someone's time. Be really weary about that, because just making a call for the sake of making a call, or making an offer for the sake of making an offer, doesn't always do you good. And someone might turn around and say, well, I don't know, maybe you really would sell. I think that could be true in some instances, but also you can really alienate yourself with somebody when you prove to not be serious, or be thoughtful about how and the ways you approach a certain situation.
Yeah. It's very, very important to understand the nuances of the deal. That's something that I was talking to. So he's a commercial broker in New York. And his big thing is, you need to understand every single bit about the property before you even make the call. Before you call someone, you need to understand the square footage. Are there going to be any issues with the property before someone buys it? You need to know every little thing. Did someone down the street buy recently? Sell, buy, whatever, right? It's very,
Yep.
very important that you understand the deal before you even come into contact. He said people would just hang up on him if he didn't know anything. So understand
Well,
the
you're
nuance.
100% right. Yeah, if you bring me something and I said, Andrew, what do you like about it? And you said, I don't know, I just saw it on the market. Well, okay, that's not very interesting. But if you called me and said, look, here's what I see. I see the seller has got a debt maturity coming up. So I think they're probably a real seller here versus someone who's just testing the market. Two, I went and secret shopped the property. I went and met with their broker, pretended I wanted to lease a unit. I haven't gotten a call back and it's been 5 days. So it tells me that they're probably leaving some money on the table. And oh, by the way, I've got a rent roll here and I've got this. And when I gut check my rents versus, Cooper, you tell me, but these seem to be three comps. It seems like we're 20% below the market, and they're not using a revenue management software, which probably tells me they're leaving some money on the table. Okay, your job is not to do my job for me, but you now just brought me a cohesive thought that says why this is worth my time. And if you just went that far, man alive, one, what you'd probably find is there's less interesting opportunities than not. But one, you'd know the market better. And even if the deal doesn't work out, I now believe and know you're thinking about deals at a level that is somewhat interesting. Because, by the way, those are going to be my first 5 questions. Those are going to be the first 5 things I do if I am interested. And by the way, you saved me time. And you'll hear me say this a lot, but time and where you spend your time is a really valuable commodity. So one of the things we try to do here in Central Texas, where Wildhorn primarily invests, is we try to underwrite every multifamily deal or deal that sort of fits our buy box in the marketplace. But it's just as important. So what we're saying there is, I want to pick every deal up. But I'm also going to tell you it's just as important that I be able to put deals down quickly because I can't sort of rat hole on every deal. I can't go to a 10 in terms of my work. So pick a deal up, figure out how you get through it in an efficient way and put it down when it doesn't hit your buy box because um, time again is your only serious and real commodity that you can control.
Real estate agents, are you struggling to capture leads? If you're struggling to capture leads through your website, we can help. We've created a step-by-step guide on how to use our lead capture engine. It's the system we've used on all of our real estate websites to capture sellers, including Cade Covey, who earned an extra $80,000 in just 3 months by working with us. Are you ready to set up your lead capture engine? Visit dmrmedia.org/gift to learn more about how we can get warm leads like a pro.
That's exactly right. Time is probably the number one biggest thing in real estate. One of the things that I hear often is you need to act fast, but you need to be patient. So like when a deal comes to you, you need to act fast on it, but you also need to understand the returns and the long-term effect of it. That's why you have investors, fundamentally. I'm curious.
I think,
Go ahead.
yeah, I think that's an interesting statement. One truth you try and remind yourself is there's no silver bullet deal. There's no perfect deal. And by the way, what we've been experiencing as an industry for the last 2 years will tell you, there are some deals we did that we've raised the NOI by 30%. We've improved our book for what we thought we would do, benchmarking well above what we could have ever hoped. And by the way, our investors are going to do fine. They're going to earn a low teens return. But if I'd told you based on where we were 4 years ago, man, we're going to raise the NOI by 30%. One, our investors should be making well above a low teens return, and Wildhorn should do really, really well also. And it's a great reminder that there is no perfect deal out there. The market timing rates can move against you in a way that can chew up a lot of value. And so don't believe that just because a deal comes across your desk that you have to sprint. You always have to remind yourself what your non-negotiables are, right? What are your lessons learned? What are the things that no matter what, if I can't check these boxes, there's no other factor that's going to make me, it's going to make me compromise on these things. And so I think where you see that a lot in the marketplace and where a lot of people got in trouble kind of coming out of 21 and 22 was deals were moving so fast that they were compromising on non-negotiables in a way that when the market moved against you, they were kind of holding the bag. And so yes, a good opportunity shows up on your desk and you don't dig into it for 2 weeks, that opportunity can move away from you. I think that's the moving fast, but I actually think the moving slow but once I pick it up, if a buyer or someone's telling you, well, you have to move, you have to move, you have to move. Look, I only can control what I can control, but I have my process. And if I don't have enough time to get through my process, I don't necessarily know it's for me. And if you know why you have to get through your process, you're going to end up in a better place. And I had a deal recently where we're working on buying something and the seller was threatening us with timing. It had some hair on it that was not our, we didn't cause the hair. The buyer was more or less saying, look, how about this? Can you please compromise on something? If not, you may lose the deal because it's going to take too long to sort it out. And I'm talking carefully because it's something live. And in much the same way, what we try and remind ourselves is, no, I can't compromise on that hair. If you work that hair out, I'm a good buyer. And lo and behold, it was a great reminder. Seller works that hair out. We're going to transact, but you just never know. Don't believe that there's some deal so good or some opportunity moving so fast that you should be compromising on things that is frankly the way you. That's how you get hurt in this business, is because you start moving too fast or don't check every box, cross every T, dot every I on your non-negotiables.
I agree. That's something that I've been very cautious of. So I'll give you a good example of this. I'm young. I'm 20 right now. And I was looking at buying my first essentially residential real estate, get into essentially buy it, have a cash flow, whatever. And it just happened that last year was not a good time in the market. I could not find deals that would fit, that would make sense. And so this year, now I'm scraping back and I can find a few. But the problem is you need to dive into every single property because, especially if your first property is bad and you get a bad taste in your mouth, you ruined a lot of real estate for yourself, specifically on the investing side. And so you have to be extremely, extremely careful with people being pushy on that respect because they will try to push you into a deal that doesn't make sense. That's just the nature of sales. People tend to do it.
I think that's true. The other thing I'll tell you though is that for someone that did a deal 2 years ago and that deal's not done what they hoped it would do, um, don't believe the cover up's always worse than the crime is a saying we live by here, right? So, hey, you missed something, or by the way, the market just moved against you and your investors are frustrated with you. Go back and grade your own paper. Were there things that you could have seen and controlled? Probably, yeah. And be honest with your investors about those things. Own them and wear them. Sometimes all someone wants to hear is, hey, I missed this. I won't miss it again. And then also don't apologize for things you can't control. By the way, everybody that is investing in real estate should remind themselves, don't invest money you can't lose. It is somewhat of a gamble no matter what you're doing, right? Otherwise, they would be putting their money in the treasuries. And that is, by the way, where a lot of people have put money over the last couple of years and for good reason. Um, but don't believe where you see people make a mistake is they feel some pressure that, hey, I did my first couple deals and they haven't gone as well. I took other people's money. And gosh, now I'm afraid to tell the truth about how it's going because I'm afraid that track record is going to somehow follow me around for 30 years. The only people that don't have a deal that is not gone exactly if you did a deal, before the last 18 months, it's not gone how you said it would go. There's just no two ways about it. The degradation of value from rates, every deal has done worse than they thought it would do if they did it before 2 years ago. So don't believe that you somehow have this scarlet letter on yourself, and especially don't make decisions on that one deal, taking into account the next 30. Do what's best for the investors in that one deal. And if that was, hey, sell now, return back 40% of people's money and apologize for it, explain what happened. Don't extend and pretend or delay bad news because somehow you're afraid to tell investors, hey, it didn't go the way it was supposed to go. If what's best for that investor and that investment base and that deal is to return capital and not return 100% people's capital, do it. Where you see people get in trouble, and I'm seeing people get in trouble now as they're doing small things where they're taking a bunch of additional debt and you hear this, hey, I know I'm going to have to give bad news. I just don't want to give it today. Man, that is a really dangerous way to treat your investors. And I think investors, and I have found in our investment base that our investors have been very understanding, very savvy. When a deal's doing fine and deal's not doing as well as you'd hoped, or hey, we're at a crossroads here. We're going to make a decision to protect your capital, and we may take some upside off the table. I think your investors will believe you and trust you more when they know and can see how you're thinking about it. But never make a decision for your investors that somehow has to do with some hypothetical track record you're trying to protect down the line.
It's all about honesty. Like just straight up. If you're honest with your investors, like, hey, this didn't go well. This is what we're doing to mitigate it. Like, I don't think anyone would care. I mean, I have a client.
Oh, I'm sure they care. But I think they'll respect you for it and they'll understand it.
You're right. Yeah. That's a better way to phrase it. I have a client where we're essentially just breaking even. And I'm like, the problem is we're in a market in which there's not enough buyers nor sellers to really make it worth his time. And so we're breaking even. We're not losing any money. But I'm like, listen, man, I think if we leave it where it is, it's probably safe. I don't know if it makes sense for you to continue doing this. And so I'm letting him go. And I think it's just that, being upfront and honest about it. As soon as the market grows, he's going to come back and be like, "Hey man, I think we could try again." But you need to be honest about it, because the moment you break, you're not honest about something, your reputation's ruined forever.
Well, it takes a while to get someone to trust you, but ultimately it just takes a moment to lose that trust. And so, I mean, the truth of the matter is, if everyone knew what the Federal Reserve would do, I mean, as a reminder to your listeners, and this is something you have to, agents probably pay less attention to than they should. The Fed raised rates faster than they have ever raised rates. So nobody had that in their bingo card that invested in real estate. You can't say, yeah, I saw that coming and I did a deal in 2020 or 2021. Both things can't be true. And so yeah, we have deals where we fixed our debt and then we look really smart. And we have deals where we have floating rate debt and you go, man, I wish we'd fixed it. At the time, nobody knew. And if you did know, you would obviously have done things differently. And so that would be my one advice for those that have put deals together and raised money. And by the way, it is important. Don't be flippant about it. When you take someone's money, and as a believer, stewarding someone else's resources that God has given them is a really serious thing. I take that very, very seriously, whether it's a small amount of money for someone or a large amount. And that's one of the rhetoric we try and remind ourselves is we are stewarding resources. There's a responsibility that comes with that. We're not moving people's money. We're not growing people's money. We're stewarding their money. And that is something that is sort of a North Star for us that we try to always keep our eyes on.
Good. Yeah. I also wanted to kind of ask you about your investment strategy, because you're primarily multifamily and build to rent, if I'm correct.
Yeah, we predominantly, I'll give it to you in a nice box. We are operators, and so most of the deals we do have a housing bent to it. So that could be multifamily, that could be built to rent. We are working on one single family development with a single family home building partner. We're very Central Texas. We are Central Texas focused. So the Austin area and San Antonio areas where 100% of our investments have been. That doesn't mean that will be the case forever, but very likely it does. And I've used this on other podcasts, or if you've ever seen me on one before, I apologize. But one of my favorite movies is the movie Rounders, and it's a poker movie. And one of the quotes from it is, "If you don't know who the mark at the table is, it means it's probably you." And that doesn't mean we know Austin or San Antonio perfectly. But if you've ever invested in a marketplace and you see outside capital come in, I have always struggled because you just can't know a city as well if you're visiting that city quarterly, right? And when you see a deal come up, when we're pursuing a deal, we're living and breathing that deal, its comps, the submarket. We're parked out in front. We're parked at the Starbucks across the street. We're trying to understand traffic patterns. We're trying to understand who our renter is there. And there's just a reality that you can't know something at the level you need to know it, or at least we can't. Maybe this says something about us. So we've stayed Central Texas focused. It's where we're from. It's where we have the relationships to transact quickly. It's where we've chosen to kind of go 6 miles deep and 6 feet wide. The other thing, and it's proven true, is if we bought deals in Raleigh, Durham, or Salt Lake City, great markets that really smart owners have purchased in, we're operators, and the Goldman Sachs of the world and the Blackstones and the Black Rocks that are sort of placing bets across major markets, growth markets across the country. That's not what we do. We are operators. We are living and breathing an asset, trying to mold it, change it. And when the market moves against you, like it has across really the major growth markets, because we added a lot of supply and we've seen rates grow. If I was talking to you guys as investors and we were on a Zoom and I was saying, all right, guys, things in Raleigh, we're seeing 8% loss to lease and rates. And you guys asked me, well, is that our asset specific? What are we going to do to fix it? all the things that you would be valid questions about what's happening. And I said, well, I'm going back in 6 weeks and I'm going to check on it. Then I'm going to spend 24 hours there. That's fine, but I can't really move the needle there. If we have an asset here and I see that asset lose 6% of occupancy over a 3-week period, I've gone and worked in the asset. I've gone and cleaned the units myself. I've gone and lended a helping hand. I'll post up at that asset and work there for the next 5 days to make sure the things that we can control. We can't control rent growth, but I can control. Usually what you find when an asset sort of takes a turn in a precipitous way is you've lost sight of the blocking and tackling, the core tenets of what operating an asset looks like. And I think that's true no matter what, multifamily or not. And so we have always struggled with this idea of stewarding other people's resources. I can't affect them as much when they're outside of a place that I can live in and breathe it. And so that doesn't mean investing in outside of those things is a bad thing, but ultimately what I'm banking on is I'm banking on making a good buy, and I'm banking on the market moving in such a way that I get to ride the wave and benefit from it. That's inherently not how we've approached our investment thesis in the past. I don't bemoan someone for doing that, but that's just not what we've done.
That makes total sense. I wanted to ask you as well, do you have rent caps in Texas?
No, we don't. So
Okay.
Obviously Texas is a conservative state, and whatever that means socially, I know there's a lot of various opinions out there, but we don't have rent caps in Texas. It's a right to work state, and we have not had rent control. And even Austin being what you'd call the blueberry in a bowl of tomato soup, it's still Texas.
Okay. Yeah. Do you think not having rent caps or any sort of major regulation on that, do you think that's benefited you at all? Or do you think it's almost kind of the reverse for other states? Because I know California has the what's it called? The AB 14 something. And it essentially states that you can only raise rents up to 10%. I'm assuming that would have a negative impact. Do you think it's been beneficial to not have that?
So I'm going to take social issues off the table, and I'm purely going to talk about it from an economic standpoint. There's a reason why Austin and Texas, so the major markets in Texas, all four have been top 10 job growth markets over the last 20 years, and they've been great population growth markets over the last 20 years. Austin being number one on a percentage basis job growth market over the last 20 years. It's because companies look at in New York, Illinois, and California being the greatest examples of it, overreach from the state, and then frankly social issues that go down to quality of life issues have become real problems where you're seeing people leave in those states in mass and move to the state of Texas. I don't live in those states, but I can also tell you we have seen in much the same way, and it's part of why we've suddenly overbuilt our market, capital say, I can't invest in California anymore because my taxes are going up. So the state is eating my lunch on taxes. They're capping my rents. So we're not letting the market tell us, we're not letting renters tell us what they can and will pay. We're being told what we can and will pay. So I'm getting my lunch eaten. I'm getting my taxes. I'm getting my growth capped. And then we're not delivering a quality of life to our companies and our residents in a way that they want to stay here. Because the data is the data. People are leaving California. They're leaving New York in mass because they're not getting a quality of life. The data would say that is bad for investing. That doesn't mean that you can't go make monies in those markets. I know, and we have partners that do really well in those markets. But I can tell you in mass, they would tell you they would do better and their investments would be better should you be able to actually just let the market tell you. And by the way, Austin, and I'll give you an interesting data point. This works for you and it works against you, but the market is the market. In 2021, we had 20% rent growth. Some of that was baked in inflation. Some of that was in migration. Some of that was massive job announcements here. we've had -8% rent growth in the last year. That's lowest in the country. But what it is telling you is that the market is telling us what renters are telling us what they can and will pay. The reason we've had -8 rent growth is because we've had supply of new apartments at a level. So we have a supply demand issue right now where supply is outpaced demand. And so you've seen rents come down. We've also seen we have the number one apartment absorption in the country, which means we are working our way through that supply. That's what you learn in Econ 101 in college. That is the market telling us what rents are. And I'll remind you, over those same 3 or 4 year period, we're up 4% year over year. So we kind of had this big swing up and then we've come down a little bit, but we're still 4% up year over year, which would be among the best in the country. As an investor and as a renter, I have no problem with that, right? Renters get to pay what the market will allow them to pay. And sometimes that works well for you and sometimes that's not. And it's my job as an investor to make investment decisions in light of that. I think you're solving for the wrong thing when you're capping rents and then you're also not delivering the other things that you're supposed to be able to deliver as a landlord, right? A landlord cannot deliver a good quality of product to a renter. It always finds its way back to a renter. So anytime you see these jurisdictions impose great taxes, that just means people's rents go up. Or if their rents are not allowed to go up, that just means the quality of service they're getting in their apartment complex will go down. And you see that very well in places like New York and places like California.
Real estate agents, are you tired of chasing leads? If you're struggling to find quality sellers or feel like marketing takes up too much time, DMR Media can help. We specialize in getting real estate agents high quality leads, ready to buy leads through SEO and pay per lead approach. That means basically no upfront cost and zero risk. You pay when we deliver results. Imagine a steady flow of clients finding you on Google while you focus on closing deals. We've done it for agents like Cade Covey, who earned an extra $80,000 in just 3 months with our system. Take back your time and get results. Visit dmrmedia.org to learn more about how we can make your marketing work for you.
I 100% agree. And I think the other thing that people kind of forget is 9 times out of 10, even if the apartment is cash flowing, a lot of that cash flow goes back to do maintenance and repairs and other things. And so that also aids to the quality of life. Granted, you still like cash flow, you still make money off of it. But I think people forget that little bit.
Or maybe not, because you see this in older apartments now is plumbing is the plumbing. There's a bunch of different ways you could put a Band-Aid on it or you could fix it. Well, if you don't have the capital to fix it, and by the way, I promise you, if somebody owns something as an investor, they're going to do what's best for their investment. Unfortunately, that's not always what's best for renters, and city officials don't always see that, right? And, the one thing we try and remind ourselves is 70s apartments, they all have plumbing issues. Not one of them doesn't, because they're 50 years old. There's just no way 50-year-old plumbing is going to operate like 10-year-old plumbing. And so you do as a city have to, and Austin has done a really good job of this, and we are starting to see incentive programs for owners of older properties because they recognize it always finds its way back to a renter. And it's going to find its way back in foundations. It's going to find its way back in just sort of your baseline services as properties just naturally occur and get older. And so, and if an investor has to make a decision on, can I afford to fix the foundation the way it needs to be fixed, or can I limp it along? If they're getting eaten, if their rent's being capped by their jurisdiction, I promise you they're limping that thing along.
Exactly. And the other thing that I'm seeing is there's a lot of benefits for people who are buying older homes that I'm seeing pop up. So in Wisconsin, there's a new one that just came up with WIDO, which is it's an FHA loan in Wisconsin. And it's essentially a $50,000 grant if you get a home that's, I think it's 50 years or older, and you're a first-time home buyer. So there's a bunch of different stipulations around it. But they're trying to help essentially increase that quality of life. And that's a hard thing for investors if you have to stomach that $50,000 upfront with buying a property.
Well, I think it's a great call out to something that we own some older properties here that we've um, worked really hard. There are more city programs and state programs than you would believe. It's not always easy to find them, but if you do the work and you get on those websites, we've had some really fantastic city and state programs that we've been able to utilize that other folks just frankly don't know are out there. And cities have come, there's some city programs that have come in and they will, because they're smart deals, right? They'll come in there and service your HVAC units and bring them up to code and provide newer units because that will make your units more energy efficient, which will lessen the strain that we have on your electric grid. So it works both ways. And so it's a great call out to, as a broker or someone who's helping steward value for an investor, be really, really always checking, because these city programs don't always come into effect and stay in effect. They're usually periods of time, but there have been some really impactful programs to some of our investments that we've known about and been able to put in place that, frankly, it was because we checked some of the city websites. They weren't brought to us. No one had the idea. We kind of checked in, and there's some really, some cities and states like in Texas have some really fantastic programs that make your investment work better and frankly are great things for your residents. Like we try to always be resident focused. And if you take care of your residents, you're usually going to make money. And some of those city programs allow some of these older units to be more energy efficient. So in the hot summers here to stay cooler, which makes people feel just better about where they live. And frankly, it benefits the asset because it allows the asset to be more energy efficient and use less electricity. So the net is good for everyone.
Yeah, 100% agree. And that's one thing. So I write a lot of blogs for real estate agents. And one of the things that I always write within those blogs is, especially for first-time home buyers, investors, different grants that cities in the area can do and help with. And quite honestly, that's a really hard thing to research because they never make them public. Like I have to dig through the city archives to find those things.
Well, they are public. They may not promote them the way you would want them to be promoted. It's probably a different way of saying it.
That's a better way to say it. Excuse my phrasing. No, it's really, really hard to find those. So I'll give you
and I would agree with that.
And just north of me in Mosinee, I had to dig through their website, go into the old archives and scroll to find some of their programs. Why? I'm not entirely sure, but it's really, really important that you find those archives and bring them to the forefront so that people can actually use them because they're beneficial for everyone.
Or go down and meet with your city officials. You would be shocked. I think folks that work at town halls sometimes get a bad rap. A lot of those people are down there because they're really good civil servants that really want to do the right thing. Go down there and ask folks in the departments, hey, is there anything you think is an underutilized program? They usually don't run these programs because they just want to waste people's time. Sometimes they'll tell you, you know what, this program I think is really great. And we've been impactful. We lobby in the city of Austin on behalf of the real estate industry. A lot of times a city official wants to know what they're missing. Why isn't this program being used? And they're open to feedback on how that program could be something that is useful. And so, in Austin, we have 10 single member districts with one city council member. And we just had 6 districts come up for reelection, including our mayor. We're taping this a couple days after election day. And you should know who your city council member is. You should have a relationship with your city council member. And even if you don't meet with them, their staff in Austin is available to you for your district. Go sit down with them. Make sure they understand what's happening in your district, what the struggles are. And even as an investor, what are some programs that they could put into place that you would utilize for the betterment for the residents? Because what I found is if you bring your city council member or your official a fully bought in idea of how one, it's okay for you to say, I'm doing this so we can make more money. Don't apologize for making money. Everybody that works, his goal is to feed and take care of their family. But if you can show them why it's good for them or the members of their district and you, I've found that 99% of the time that city officials reciprocal to that idea. Where we lose step is, hey, I've got an idea that's only good for me. It's not good for my renter. It's not good for my investor or my resident. And where you tend to see owners get frustrated is when city officials only make decisions that they think are good for them and they somehow don't think that you need to have it be balanced. That's where the problems lie in. But if you come to the table with a good idea of how a program can be tweaked or changed to increase its usage, I found more times than not, at least in Central Texas, that the city officials have been really receptive.
Yeah, talking to the city is a really, really good tip there. I wanted to ask you as well on kind of the city official thing. If you're sitting down talking to them, how many do you get pushed through? Like, have you ever gotten a bill, anything like that pushed through that's been beneficial for both you and the renters? Or has it just kind of been this, like, you could try this, you could try that?
I'm a little bit unique in that I was the chairman of what's called the Real Estate Council of Austin, which is uh, the largest trade organization for real estate professionals in Central Texas. So in 2023, I chaired the organization. So in effect, was one of the lead lobbyists for the industry. And so we have, and RECA is what we call it here locally. I've been on the executive council for almost a decade now. We lobby at the state ledge, and then we lobby on a daily basis at the city. And so it's not me, it is our organization. And we have really, really gifted full-time staff members that city officials don't make a land use decision without checking in with. So we every week, every month, every quarter have affected or championed something that gets done at a city level. And then we do our legislative sessions every 18 months. We're about to start ours next year. We've passed 6 bills, I believe, in the last 3 sessions, and that have all been net positives for not only, I think, our industry, but our city or, the folks that we work with. And most of those bills have been statewide bills where we are experiencing an issue in Austin that affects other major markets in the state. So that's one of the things that I do as a volunteer that my partners and my team allow me to do. One, I think that makes us better investors. And two, it absolutely helps us make sure that we're affecting things in our market. And then 4 of our investments, just individual investments, we've had rezoned. So we've changed the underlying zoning on those properties at the city. Those have been successful rezoning issues. Those aren't necessarily laws. Those are just zoning cases where we've taken a baseline zoning and part of our business plan has been to change it. And in many of those cases, when you see what we're experiencing in the marketplace right now, we've been able to save investments or protect investments through zoning changes in ways that if we didn't have that bent, we might not have that trap door for our investors. And so that is a central thesis, understanding laws, what's being contemplated at the city, what's being contemplated at the state, how can we affect it, or how can we guard against it is a huge piece of kind of where I went back to real estate being a local business and why we struggle, we focus really just in Central Texas because I think that stuff really matters.
I love it. I'll tell you what, I don't have anything else for you. So where do you want to send people?
Well, I appreciate it. We take new investors all the time. Our website's Wildhorn, www.wildhorncap.com. So just like it sounds, wildhorncap.com. If anyone ever has interest in investing with us or getting to know us, you can enter your info in there. You'll get a phone call. It's not just you get put on a list. You'll get a phone call from Andrew or I that love to allow you guys to get to know us. This is what we plan on doing for the next 30 years. And so we're never in much the same way trying to rush someone to do the next deal we do. And one of the questions I get a lot is, well, when are you going to do your next deal? The truth of the matter is when we find something we're excited about. And that could be next month, that could be next year. But again, we're not going to compromise and do deals just for the sake of doing them. And we're very interested in knowing someone and starting a relationship with a broker or an investor long before there's ever a deal. And so that's probably the easiest way to get to know us. We're on LinkedIn as well, and I'm on LinkedIn as well. And so would love to get to know anyone that has interest in learning more about Wildhorn.